We've got Mr. N.S. Venkatesh, who's Treasury Head at IDBI Bank, joining us on the show. Mr. Venkatesh, to begin with, just focusing on the fixed income markets to begin with, for the week, what do you expect the broad range within which the 10-year benchmark is expected to trade at?
The last week it closed at around 817 levels. Today, currently it is trading in between 818, 819 levels. I believe that the market is looking out for a signal from RBI for the OMO to happen. If the OMO does happen, then definitely I expect the yields to trade anywhere between 815 to 819 levels this week.
And what if the OMO doesn't happen?
The OMO doesn't happen, then maybe it should push the yields up to maybe around 822.
All right. With respect to the kind of liquidity situation also that we've been factoring in, there was that CRR cut that we had, and the daily deficit though does seem to be fairly strong for the bond markets. What do you think that the market needs in order to get the liquidity issue addressed?
No, basically the last time the CRR was cut, around 32,000 crore was injected into the system. That was more of a permanent liquidity measure, a structural liquidity measure. I think the market was looking at, considering the circumstances that the LAF borrowing is at around 1,20,000 crore average. I think the market is looking at whenever an auction is announced by Reserve Bank of India, at least some OMO operations to happen, around 10,000 crore OMO options to happen, which will ensure that at least the market participants will be given a chance to create space for buying the new security by surrendering the old security which has been announced in the OMO to RBI. So I think it is a combination of an OMO plus a CRR, I think will enable the market to be positive in sentiment.
Right. Now, Mr. Venkatesh, last Friday when we had the IIP numbers put out, and those numbers came in much lower than what the market was expecting, there was this expectation beginning to build into the market that maybe the RBI will move much faster on interest rate cuts than initially expected. Would you go with that expectation rather really from the RBI?
Our house view is that basically by the April policy, maybe RBI, once they see the entire trajectory of the inflation coming down within the levels that they have predicted, I personally believe that in April they may start with a small rate cut to ensure that they support the growth policies.
Sure, but you know, Mr. Venkatesh, tomorrow is the day when we get the monthly inflation number for January, and that number is expected to come in well below 7%, which really is the March end target. To that extent, do you believe that that will give the RBI that much more comfort in terms of the direction in which inflation is headed and possibly do something with the repo rate on the 15th of March?
I personally believe that as the inflation numbers, our house indications are also somewhere around 6.7. So definitely the trajectory is coming down to the 7% levels which RBI had predicted. I think they will be, once they see those numbers, they might be comfortable. But overall, I believe that RBI might take a stance by maybe providing liquidity by a CRR cut in the March policy, and then do the rate cut sometime during the April policy once they see the budget numbers and because RBI has been time and again telling that they are concerned with the fiscal sort of this thing. So once they see the budget numbers, then they get the way in which the fiscal correction is happening or the fiscal consolidation is happening. Then that will give them the maneuver, the room to maneuver for starting with a rate cut. That should happen in April.
And also, Mr. Venkatesh, do you believe that if on the 15th of March we do indeed see another half percentage point cut in the CRR, it's really not going to do very much for liquidity or for the liquidity situation during that period, simply because an equivalent amount of advance tax outflows will have happened at the same time?
Now that is the reason why I believe that maybe they may cut the 50 basis point CRR. So at least it will compensate for the money that has been drawn out of the system through the advance tax, though the advance tax will come back into the system a week down the line.
Sure. So would you say then that the tightness that we are presently witnessing will begin to ease only maybe in the first week of April or so?
Yeah, going ahead, I think it should start easing sometime during maybe the last week of March or the first week of April. I agree with you on that.
And is there any chance that you see perhaps the yields cooling off even further, and what factors do you believe that would be contingent on?
The one thing that which could factor the yields coming down is basically the anticipation of Reserve Bank of India cutting the rates going forward to promote the growth, support the budget and promote the growth. So if that trend is visible, then definitely I believe that the yields can go down from the current levels of say around 8.18, 8.19, maybe to 8%. And when the actual rate cut happens, maybe that is the beginning of the rate cuts, because it will be the initial rate cut. It will be the beginning of series of rate cuts. The house view again is that 100 basis point rate cut is what we are expecting in the entire financial year 12. So that will ensure that the yields can come down sub 8 after the rate cut starts.
And Mr. Venkatesh, also, a word on the rupee, because at the start of the year, there were people who were beginning to put out forecasts of the rupee possibly going all the way to 47.5, 48 for the remainder of the year. Now that there's again some amount of weakness coming back into the rupee, and the trade deficit numbers seem to be just widening, would you go with the assessment that the rupee is actually going to weaken from here on and possibly go to the 51 level?
I actually personally believe that the rupee will strengthen for the simple reason the budget, it depends on the budget, in the sense that if the budget starts putting out for the industries to grow, so then if it becomes a growth-oriented budget, that will ensure that basically the institutional investors and the foreign institutional investors, in addition to the domestic institutional investors, taking an interest. The flows from the foreign institutional investors will come in, which has already started coming in from January and February. So it will continue to flow. So if that happens, definitely what will happen is there will be more dollar supply into the market, which will ensure that the rupee starts strengthening a little bit.